Okay, I want to talk about a cash out refinance. And I mean, this is by far my most favorite strategy, the strategy that I want to use to snowball and scale my real estate portfolio without any partners. And once you learn and leverage this concept, this is how you recycle your money and increase the velocity of your money without having to sell any deals, right? So like it's a lot of work to find a property, to stabilize the property, and to execute the full cycle cash out refinance, all right? So once you have a golden goose, like why would you kill your golden goose, right? It's laying you nice golden eggs every month. Like why would you kill that goose and then sell it, right? So that's my philosophy. Yeah, yours might be different, but I am a true buy and hold. I never want to sell, ideally. I say that now, but maybe I'll change if I scale and own like 1,000 units. Then my mentality might change. But until then, I'm definitely a buy and hold. So a cash out refinance allows you to turn equity into cash through refinancing your mortgage into a bigger loan. So yes, you are taking a bigger loan, but you're increasing the velocity of your money, right? Like your money is not stuck in a property. There's no more dead equity, right? So if you calculate your return on equity, you can see how much cash flow you're taking on a monthly basis or on an annual basis, and then divide by how much equity you have stuck in the property, and you'll look at your return on equity. It might be very weak, right? And while you can't cash out all your equity, you can access more cash, right? With apartments, the value is based on NOI divided by cap rate. As we increase the NOI by raising rents, billing back water, sewers, renting out reserve parking, renting out storage, renting out garages. There's so many ways to raise your NOI, and you're raising the value, and then you can do a cash out refi to access that additional forced appreciation in equity, right? And since you're taking additional debt, the cash out refinance is tax free because the IRS will not tax any debt, right? So at that point, if you put out all your initial down payment, all your initial renovation costs, you're at that infinite return because now your denominator is zero, right? So now you have all this cash flow and no money in the deal, right? And if it's done correctly, and when you do cash out refinance on investment properties, all those loan fees are tax deductible and you can depreciate them, over a certain time frame, and you can see it on Intuit TurboTax, and if you work with a CPA, right? So that's the beautiful part about it. The cash out refi is by far the most challenging strategy, but the most rewarding when completed, and it's the best way to build long-term wealth. When you fix and flip, you are rich, right? Rich is you make a lot of money today, but wealth is when you have that long-term buy and hold mentality, and that's when people become wealthy, right? So fix and flippers, wholesalers are rich, but if you buy and hold, you're wealthy, right? That's the goal. And cash out refinance allows you to keep your stabilized apartment complex, pull out all your money, and reinvest into a bigger apartment complex, right? That's the goal, right? You want to snowball these into the bigger ones. It takes on average 2 or 3 years to execute your value add strategy to increase your NOI, and you want to stabilize that NOI to then engage your lenders to do a cash out refi, right? So this is how you create the snowball and you get larger and larger deals, right? So I start with my 20 unit cash out refi, buy a 40 unit, cash out refi, 80 units. And that's literally 160 units in 10 years, assuming you're doing a cash out refi every 3 years, right? I mean, if I told you you can get 160 units without any partners, would you tell me I'm crazy? It's possible if you buy right, you do cash out refinance right, and you snowball it up, right? And you have a slow and steady approach, right? And don't get me wrong, 160 units is enough to have a nice retirement. Very, very nice retirement. And what's nice too is you can do multiple cash out refinances on the same property, right? As long as the NOI keeps on going up every 2 or 3 years, right? You can look at the data. During a recession, the rents always go up, right? The rents, even during 2008, when the market crashed, the rents still were steady or went up, right? So, value add apartment complexes and cash out refinance going hand in hand, right? So maybe my 26 unit, I do one cash out refi, pull out my initial money, buy another apartment complex, and after another 3 years, maybe I raise the rents again because people are moving to Oklahoma City, and then increases again, right? So you just always do a cash out refi, and you continuously are just pulling more and more money out of this thing. So it's almost like an ATM or a piggy bank that you just pull the money out, right? So that's why a bunch of investors start off with value add C-class apartment complexes. But once you have a strong foundation, like you own 160 units after 10 years, you can invest in more A-class, the newer apartment complex of minimal value add, right? So you graduate from doing heavy value add. It's more stress, more headaches, and you just buy the more steady Eddie A-class. Your cash on cash return is not going to be as great. It might be like 4 to 6%, but at this point, you're just trying to preserve your wealth, and you want the tax benefits of owning that A-class commercial asset, and you'll attract the higher end tenant. You'll attract the higher end property manager. They're a lot nicer that you would probably want to live in your own A-class apartment complex, right? You may not want to live in your own C-class. So, that's the power of real estate, right? You can choose your own journey, and you evolve as your real estate portfolio evolves, right? So we're all starting off C-class, but maybe one day I want to go to A-class. So here's an example of a cash out refinance tied in with forced appreciation, right? So this is my 26 unit apartment complex. I got it for $500,000. Down payment was 125K. Loan was 375K at 75% LTV. I'm spending around 10K per unit to renovate all 26, and I may not renovate all 26, right? I might want to keep some more affordable units, but for this example, let's say I renovate all 26 and I can raise the rents by $200 per month. So my renovation budget is 260K. If you include my down payment plus renovation, I'm all in for 385K. My NOI, so you take the 200 times 26 units times 12 months, 662,000 increase in NOI, assuming it's an 8 cap market. I think Oklahoma compressed a little bit to 7 cap, so it might be even higher, but I forced about $780,000 worth of value, right? So now my new value is you take that $500,000 plus the 780K, it's $1.3 million. I'm doing a 25 or 75% LTV. So you take your new loan, it's going to be your value, 1.28 million times 0.75. I can take out $960,000. I'm going to minus my existing loan, right, of 375. So I take out $385,000, right? So remember, initially I was about $385,000 in. I pull out 585. So essentially, I pulled out all my down payment, all my renovation costs, plus an additional $200,000. So now I can use that $580,000 to buy maybe a 50 unit or an 80 unit, right? And that's when you start to snowball. So this is how powerful it is. I think my apartment will be worth around 1.5 million, to be honest, assuming an 8 cap. And if you lower the cap rate, it might be like 1.6, 1.7, right? So this is what's crazy about buying one deal and how powerful one deal is. And next, you want to engage your lenders early. Most commercial loans have a 3 to 10-year fixed term or may have a balloon payment, forcing you to execute that cash out refi or sell the property, right? But if at least 6 months prior to your term ending or your balloon payment is due, remember, your lender will tell you exactly what date and month and year your balloon payment is due. So you just start showing your lender your P&L statements. Your property manager should be doing this for you, and show them your recent rent roll and quotes, and then do your cash out refinance, right? You don't want to wait to the last minute. You want to, for me, I try to pull out my money as soon as possible, right? Because I want to increase the velocity and move on to the next deal, right? Once it's stabilized, move on to the next deal and scale. So for me, I want to increase the velocity. So the moment I can cash out refinance, believe me, I will, right? Maybe right now interest rates not so great, but even then, even interest rates are terrible. I just can cash out refinance, pull out some money, and then just in another 3 years, cash out refinance again, right? So this is the power of the cash out refinance.